to know this. I owned an art gallery for 2 years. I found it a very hard business. It was a hard business because I gave wine out when they had an opening, and people used to just line up and get the wine and leave. It was a bad business model. But one thing was certain, I had no idea who was going to be successful and who wasn't. And there were people I thought were going to be dynamite, and they were failures. And then there were people actually, who was like a waiter that I met, and his stuff was great. What kind of inputs do you use that make it so it's a little more scientific than what I was doing?
Yeah, so we have a giant database of art market returns, right? So we're the only firm in the art market that actually has a research team dedicated to learning about returns. And the one secret that we learned very, very early on is that returns in the art market are only predictable until a painting costs about $1 million or more. So anything less than $1 million in the art market, I wouldn't say it's akin to a lottery ticket, but you're definitely taking a lot of risk. So we tend to focus on that very high-end segment of the art market that has much more predictable returns.
All right, so how does Masterworks make money?
We make money very similar to private equity funds. So our management fees are 1.5% per year, plus 20% of the profit when a painting sells. We tell people to think of these as 3 to 10 year illiquid investments, expect to hold the investment for a long time. We do have a secondary market now, so people are trading shares in these paintings just like you would trade shares in a company. But in general, they're longer term investments.
Do the shares go up with the appreciation, say, of another painting that's not in your portfolio?
Yeah, so that's the exact right way to think about it. And a lot of people don't understand this about the art market. They tend to think of it as this very opaque industry, but really half of the art market, $60 billion a year in transaction volume, half of that trades at public auction. So you have a huge data set of paintings that are bought and sold all around the world to really understand how prices are trending, very much like real estate. So a comparable in our market would be, a similar Picasso that's selling that then informs the value of the current investment the investor has.
All right, so one of the big problems, I think, with crypto is they resent anything that makes it into securitization. They don't want it public. They say that that's not right, that it's a private issue, that you shouldn't have to expose anything. It sure seems that, Scott, that you're taking the other point of view.
Yeah, look, I mean, we certainly don't subscribe to that. I mean, at the end of the day, all of our paintings are filed as public offerings with the SEC. So we buy a work of art, we put it into an LLC, and we file that as a public offering in the same way that Uber would go public. In fact, I think we're now the largest filer of public offerings with the SEC. We're doing one of these every 7 to 10 days. So our view is that, particularly with art, we want people to trust the asset class. We want to bring transparency to the asset class. And we think regulation makes sense in that context.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.